With interest rates dipping below 6% for the first time in several years, what does this mean for you if you are selling or buying? So this mortgage rate drop below 6% for the first time in several years is big news. And obviously it's big news in my real estate business. So I wanted to bring this video to you on what it means, whether you're selling or buying with interest rates below 6%. So for the home sellers and home buyers that are out there that are on the fence, I don't want you to try to time the market at all. Now listen, with mortgage rates below 6%, you are going to see more competition hit the market on the buy side, and you are going to see more competition on the list side as well. And I just want to go over a couple points on what it means for each one, the seller and the buyer. So if you are a homeowner looking to sell in 2026, then I have 3 points that I want to make that will impact you with these interest rates dropping. And the first one is your home's value. It's going to affect it because it's going to draw competition, which may drive prices up. And number two, it's going to affect how quickly homes sell. You know, obviously the 6% mark for an interest rate is a psychological thing for a buyer. You know, and I'll get into it with interest rates that are higher that you may have and refinancing, which we'll get to the latter part of this video. But it's a psychological thing. Just dipping under 6% is big news. And the third point is affecting the type of buyer that's going to start buying again. You know, these are the buyers that were waiting, sitting on the fence. You know, and obviously down below 6%, the psychological effect on them is going to be, we need to make a move. So on the flip side, if you are a buyer, it's going to affect, number one, your mortgage payment. Just think about this. You can save hundreds of dollars per month with an interest rate below 6% from where it was several months ago. And my point number two is it's going to draw some competition. You're going to see buyers coming off of the fence in droves. I really believe this. As I mentioned, you know, below 6% is a psychological effect when you are buying your largest financial and emotional purchase. And then point number three is, how aggressive are you going to be? Now, obviously, you know, you may have to get aggressive or you may have to be patient. You know, the bottom line is that these interest rates below 6 are going to create some competition. Now, I'm not saying it's going to create a frenzy, by no means. A lot of the sellers and buyers are actually used to interest rates being around 3%. So, you know, just under 6 is a big deal since they haven't been there for several years. So let me leave you with this, okay? The biggest mistake that you can possibly do is wait. I'm telling you, do not do this. It's under 6%. And remember, if it goes below 5%, 5.5%, you can always refinance, but getting in sooner than later is always better. You're going to beat competition. Remember, when there is competition, prices go up. And obviously, when there is no competition, prices come down. And one last point that I want to make, if you have an interest rate that are high 6s, low 7s, this is your time to refinance. You will save hundreds and hundreds of dollars per month. Okay, so if you have any questions about who to contact, or if you don't want to use the current lender you used before and you need a recommendation, reach out to me. I'm here to earn your trust and educate you and to help you make informed decisions.